Hello, hello. Can everybody hear me? Somebody throw it up in the Discord chat if you can hear me. Perfect. Okay. We'll get things started in about a minute. Um, Originally I was going to do this just as one full fell sweep 2 hour workshop. We're going to break it up into two parts. So we're going to do part one today and then part one tomorrow. Obviously, both parts will be recorded. If you can or can't tune in live to either of them, that's fine. Uh, but Basically, the reason I'm going to split it up is twofold. First of all, I think it'll make it easier to digest. But second of all, we obviously got some news over the weekend about the strikes in Iran. We don't know what the implications are going to be for the oil market this week. And I imagine equities are not going to be in a good mood in the morning. And so a lot of the daily setups that I was going to go over could be very different by the end of the close tomorrow than they looked like on Friday. And so rather than preemptively going through some of those daily setups, I will table that for tomorrow night instead. So we'll do part one of the workshop today, where we will go over the principles of swing trading, recap some of the trades that I said we were going to recap, and we'll do questions as well at the end. And then we'll do part two of the workshop tomorrow, uh, once we know where stocks are going to land by the end of the close tomorrow. So, yeah, that's kind of what I'm thinking, and that's what we're going to do. So, all right, part one. I kind of titled this "How to Swing Like a Pro" to be, I don't know, give it a cool title. But really, the purpose of this is going to be to teach you guys or attempt to teach you guys not only how to stay in winning trades, but how to identify the right stocks to pick when thematics are hot. And I think one of the undercurrents of the conversation here is going to be this idea that you hear on Twitter a lot, and you hear it, I'm sure, in investing communities a lot. Um, you hear everything is in the chart, or you hear another camp of people that say everything is in the balance sheet or everything is in the fundamentals. I strongly disagree with both of those approaches. I think the best stocks are picked with context. I think the best stocks are picked with an understanding of the technicals, the fundamentals, the catalysts on the table, and the thematic on the table. And I think when you check all of those boxes, you end up with super performing stocks. And so I'm not in the camp that just looking at charts will get you to those stocks. I'm also not in the camp that just looking at fundamentals or PE ratios will get you to those stocks. I think it's a healthy blend of both. And I think at certain junctures in the market, especially like it has been in the last 4 to 5 years, themes become the most important overlying metric that distinguishes how one stock performs from another. And for those that have been trading just in the past few years, there are a handful of categories where most of the super performing stocks have been nuclear, quantum, to a large degree, these space stocks as well. You look at what Rocket Lab, ASTS have done. You look at what Redwire has done. You look at what all the satellite stocks have done off the lows. So those three, I think, have been the major thematics, at least in the last 2 years. And owning any name in any of those themes has been extremely rewarding. You didn't even have to pick the best stocks. Some of the worst stocks in those thematics are up 300 to 400% from the lows. That can be a life-changing trade, even if they're not considered great companies, or even if the revenue from those thematics is going to come years and years later. So when you're swing trading, your objective is to find a horse with a good entry. A horse, as in a stock that will work for you over a period of however long you intend to hold it. That can be weeks, months, or years for some people. And finding those stocks, again, I think requires context. And so when you're swing trading a basket of stocks like I do, or a portfolio of stocks like I do, you should treat them like a football team. If a stock is not performing for you, it doesn't deserve a spot on the team. And there are exceptions to that if you think it's a story that isn't noticed by the market yet, or the market will become attentive to over time, then there are exceptions to that. But you really should treat your portfolio like a roster, and you should demand the stocks in the portfolio to earn their spot there. Um, so when I look for a swing trade, I'm looking at five things, and this is in order of priority. These aren't just five things I'm looking for. These are in order of priority. The first thing I'm looking for is either an individual catalyst or a hot theme, and preferably both. So the best stocks, in my opinion, are the stocks that not only have an individual catalyst, and that can be something like a really, really bold analyst opinion, can be a PR or a partnership, can be a contract with a big blue chip company, can be the extension of a big existing contract, can be any number of things. CEO insider buys, all of those things qualify as catalysts. Okay. So when you have a stock that has an individual catalyst, and it is also in a thematic that the market is telling you it cares about, those are your super performing stocks generally. And so the first thing I look at is the stock in a hot theme, and does it have an individual catalyst? It doesn't have to be both, but the best stocks for me are the ones that meet both those requirements. Sometimes maybe they're not in a hot theme, but they have a really, really good individual catalyst. Okay. Or maybe sometimes they don't have an individual catalyst, but they're in a really, really hot theme and the chart is really, really nice. Either of those things qualify as worth a trade, in my opinion. Maybe, if they meet more of those requirements, it's a higher conviction opportunity. But you can qualify for a trade opportunity without meeting every single box, right? Or checking every single box. So the first thing I look at is that catalyst or the theme. The second thing I look at is the chart. Now, I've mentioned this before. Some of you have read the post that I have on Twitter, the pinned post I have, where I wrote last year, where I sort of wrote several paragraphs on how I trade generally and how I ride momentum generally. If you haven't read that before, you should read it. I think it's useful. But in that, I sort of talk about this idea of how, for me, I'm not a technical setup trader, right? But I still look at the chart on every trade I take. And what do I mean by that? What I mean by that is that when I'm going through charts, I'm not going through them as a top-down funnel, right? I'm using them as just another point of analysis. So I don't flip through charts and say, oh, like this stock has a great technical setup. Like in a vacuum without context, I don't think that way. What I'm generally doing is I find a stock, like I mentioned, once it meets my first requirement of having a catalyst or a theme, then I'm looking at the chart. And what I'm asking myself is the chart accommodative? Okay. That's very different from what technical traders are looking for. For example, Danny, who's in our server, who's a fantastic technical analyst, and he has several indicators. He looks at TTM squeeze and he looks at fib extensions, and he plans out his trades very meticulously. It's fantastic. I think there's people that do that really well. Danny's one of those people. That's not the way I trade, though. What I'm looking for is a chart that is willing to allow more upside. Now, that can look very different in many different cases. When we did our first workshop, I showed you guys one example of that type of chart, which was when a stock has its 9 and 21 EMAs pointing up, it's riding them, and it's pushing into the 200-day resistance, right? If a stock like that has a catalyst, to me, the probability of a breakout at that 200-day versus a rejection improves, right? And so for me, looking at that kind of chart with a good catalyst, in my mind, I'm seeing a green arrow burst through that 200-day. Right? In my mind, I'm saying the catalyst has improved the probability that that breakout is going to happen. Right? If you were looking at that chart without the knowledge of the catalyst or without the knowledge of the thematic context, that chart would look like every other chart that is testing the 200-day with the 9 and 21 pointing up. Do they all break out? No. Many of them get rejected, right? But the ones that proceed to not only break out, but make parabolic moves to the upside afterwards are the ones that have that contextual fuel, that catalyst or that thematic in the background driving them. So I always look at the chart second. And like I said, when I'm looking at it, I'm looking for accommodation. I'm not looking for some specific setup. I'm not looking for a wedge or a head and shoulders pattern or, technical traders will look for these types of things, right? Flat top breakouts, these types of things. I mean, it's cool if it's there, right? If I'm looking at a stock and like there is a great technical setup there, awesome. That's a bonus. But is it required for me to long the stock? No. If I find a stock with a great catalyst and it's just sitting tightly on the 9 and 21 EMAs, I don't frankly really care about the structure. It's above all the moving averages. It's relatively strong versus the market, and it has a good catalyst. 9 times out of 10, I'm taking that. Do they all work? No, but you have a point of risk at that juncture, right? If I'm taking a stock that's flat on the 9 and 21 EMAs, if it gives them up, okay, I'm out. And usually it's for a flesh wound, right? It's a paper cut because you buy a stock that's sitting flat on that kind of support, it breaks down. Okay, maybe the stock goes down 1, 2, 3%. You get out of the trade, big deal, right? That doesn't affect your portfolio. If I'm taking a 5% position and I take a 3% loss on a 5% position, that does nothing to my portfolio, right? I took that loss. That loss had relatively low risk to the overall portfolio. But if it breaks out to the upside and doubles, yeah, if a 3.5% position doubles, that does drive portfolio performance, right? And so that's, again, kind of what we're getting to here, which is the point of this workshop, which is why staying in the trade matters. Why not getting shaken out of the trade very early into the trade as a swing trader, that matters. That's perhaps the most important thing. If your intention is to swing trade a stock and you get shaken out in the first 3 sessions and it proceeds to go up 100%, some people will say, well, you got out of the trade with a profit. Green is green. You should be happy about it. No, that's a mistake. If your intention was to trade the stock and you got shaken out on a retest of the 9 EMA, that's a mistake. That's leaving money on the table, right? Either out of fear or out of whatever, any number of reasons people sell a stock, but usually it's fear. Usually it's, oh, the stock's red. Who knows? It might be red again tomorrow. It might be red again Friday. And by then I'm down 10%. I'm just going to cut it now. That's a rookie trader mentality. And it will take you a while to overcome that. But confidence and an ability to navigate is important to that. So after the catalyst in the chart, I look at the accelerants. Okay. And I've talked about this before too. Accelerants for me are usually either short interest or unusual options flow. Or, as always, both is great too. Okay, if you have a crazy amount of directional flow on the calls, out of the money calls on your name, and you have high short interest, pretty good recipe for an explosive move. Okay, especially if you meet the first 2 boxes, especially if the chart is also hot and the theme is also hot and the catalyst is also hot. Those are really hard to lose on. Like genuinely, even if the market isn't ripping to the upside, those trades are really hard to lose on, where it's like good catalyst, good chart, options flow, short interest. And you'd think, well, stock talk, isn't that rare? Not really. Not really. If you really are aware in the markets and you're aware of what's going on a day-to-day basis in terms of the news, the analyst research that's coming out, it's actually not rare to find a stock with high short interest, a good catalyst, a good theme, and a nice chart. And those are the opportunities where, you take a 5 to 7% position and it turns into a 10 to 12 position and it really drives portfolio performance. You have 5 or 6 of those in a basket, that can make a 30 or 40% net gain to your overall portfolio. That's a big deal, with relatively modest sizing. So, yeah, to me, accelerants matter. They don't have to be there. There's a lot of names out long where they have no flow at all, or the options chain is dead. That's okay. If my other requirements are met, and, like I said, these are in order of priority, right? So if my catalyst and technical requirements are met, okay, sure, there may not be flow, but it's, I'll still probably take the trade. And then the last thing I look at is fundamentals. The last thing. Why? Frankly, because I think it matters least to the velocity of the trade. Um, Now, there are exceptions to this in the sense that a company growing earnings very quickly, I think, is a good accelerant to the velocity of the trade. But I qualify that as a catalyst more than a fundamental analysis. I'm not determining the company's growing earnings rapidly by doing a deep dive of their balance sheet. I can figure that out pretty quickly by just taking a scan of the last 10 quarterly reports, like just taking a scan of the numbers and be like, oh, okay, are they growing revenue really fast? Yes or no? That's like an answer you can answer. You can answer that question in a minute. You don't need to do an hour of fundamental research to understand that. So if earnings and revenue are growing rapidly, I I kind of add that into the catalyst basket more than I do the fundamental narrative basket because very often when companies are growing earnings and revenue rapidly, they're expensive, right? And so the traditional fundamental investor, or the traditional value investor will say, well, I'm not going to buy that stock because it's expensive. Which to me is sort of foolish because you look at the last, I don't know, 20 years, and many of the best performing stocks have been very expensive and they stay expensive. So I don't let PE ratio deter me from a trade, is really the bottom line. What I mean by when I'm looking at fundamentals last. So that's all a bit of an overview of, and a very, very general overview. Like I said, we'll do questions at the end. But that's a very general overview of the sort of guidelines and principles that I'm looking at. So today on the workshop, like I said, this is going to be part one of the workshop. We'll do part one tomorrow evening. What I'm going to do now is I'm going to recap the nuclear trade, and talk a little bit about it and talk about what we saw and why I got into the names I got into, why I got out of SMR and stayed in LEU, and all that good stuff. And then we'll also touch on the data center trade briefly and touch on NBIS, which was another one of our blockbuster callouts this year. So we'll start with Centrus Energy. Now, we'll zoom out a little bit. We'll start with the nuclear trade in general. So for those that have been in the server for a while, we really ramped up focus on the nuclear trade back in September of 2024. So if you search my journal, you'll find a post about the Constellation Energy deal, which I posted back in September of 2024. So we zoom out a little bit here. This was back over here. Okay. So Centrus Energy is our horse, so you can just kind of use this as a reference. I mean, you can go look at any nuclear stock, and back here, you guys can see my screen, right? Everyone can see the screen? Somebody throw it in the chat if you can see the screen. Discord chat, not Zoom chat. Okay, cool, perfect. So back here, this is September 2024. Okay. You can go pull up your favorite nuclear stock. I don't know, go look at whatever, your small modular reactor ones or whatever you want to look at. I'm not going to pull all the charts up here, but they were all like, the prices were all down here. Okay. And this is when the Constellation Energy deal was signed. And for those that don't remember, the Constellation Energy deal was one of the biggest nuclear deals ever with a tech company. I think it was actually the biggest ever. It was an $800 million annual deal over a 20-year commitment, 20-year commitment with Constellation Energy for Microsoft. It was a total of $16 billion over a 20-year basis, where Microsoft said they were going to use Constellation Energy and reopen 3 Mile Island. For those that remember, know about 3 Mile Island and the significance of it. It was one of the worst nuclear accidents in U.S. history. So that was reopened last year. And, for me, I've loved nuclear energy for years. Obviously, it's been neglected by politics. But the reason this was a watershed moment, in my opinion, was not because of the size of the deal and the reopening of 3 Mile Island, but I felt that it would really weed out the skepticism around nuclear energy and that it was a catalyst capable of doing that. I wasn't just talking about what was going to happen to the prices of these stocks, but I really thought that it was going to be a watershed moment for nuclear energy. And obviously, these stocks ended up going on a parabolic run into the end of 2024. It was the best performing sector at the end of 2024. LEU went from 35 to 118 in what, 2 months time? just absolutely ripped to the upside. And you look at SMR, Oklo, NNE, the power producers, Constellation Energy, Talon Energy, Vistra Energy, any of those stocks you pull up went on a parabolic move in these 2 months as the market realized that this was a massive deal. And throughout the course of this, there were additional catalysts as well, for those that remember. There were other deals that got released between Talon and Amazon, Vistra, and I believe it was Meta, and a bunch of these other power producers started signing these blockbuster agreements to power data centers, right? So this theme became a massive thematic. Come into 2025, like all themes, it cooled off, right? Price came down here from 118 back into the 70s, 80s. A lot of these stocks started cooling off. Obviously, going into 2025 here, what happened? Tariffs, DeepSeek moment. The DeepSeek moment was the real killer, right? That's when these stocks absolutely broke down. Okay, they started losing their moving averages, breaking down violently. And I mean, Centrus Energy fell from 122 to 49. Okay, so absolutely brutal dump. In fact, if you had held, like if you had bought here, right, when the Constellation Energy deal was announced and everyone was running into this nuclear trade, I mean, if you sold up here, fantastic. But if you just bought and held all the way through April of this year, you're probably pissed off. You gave back like all of your gains, right? So that's part of what the story we're going to tell here with how to stay in these trades is the breakdowns here were your signal to get out, right? Would you have given back a good amount of the trade? Yeah, but these breakdowns here, these vicious breakdowns, you came here into the 50-day, boom, boom, boom. These are where the trade became hazardous and lost all of its relative strength, right? And that's an important thing to keep in mind as we move into this next chapter of the current trade, because you want to see, hey, look, the party was great here, right? Party was fantastic here. But what happened in the months and the year following? The trade broke down because the fundamental backing wasn't there. And then obviously we got two negative catalysts back to back, DeepSeek and then tariff sell off here. So you got hit with two clubs off the open on a very, very speculative category of stocks, right? So anyway, that's when we first started focusing on this trade. And then this year, we came back into it, right? And that was here. So we got in May 22nd in Centrus Energy. Okay. We got May 22nd after hours. That's when our alert went out, right? It's right here where my mouse is, in between these two candles. Now, I was able to get some fills 96, 97 here. I know some of you were able to get fills 99, 100, 101, whatever. You filled in the after hours session here. What were we seeing? Why did we like this name? Well, we had known coming into the Trump administration, nuclear energy was a focus, right? Why had these stocks started performing ahead, right? Because we got in here. Why had these stocks started coming out and performing ahead of this? Well, we knew an executive order was coming for nuclear energy, right? We just didn't know what it was going to say, right? But this had been forecasted by the Trump administration already. So these stocks had started recovering off the lows, right? And again, guys, I'm using Centrus as an example here because I'm not going to pull up 5 charts and show you what is happening. This narrative that I'm speaking to is true for all of the nuclear charts, okay? They started performing ahead of the actual executive order, right? Because we knew it was coming, okay? Once this stock broke above the 200-day, right here, in this area, it came back on my radar, okay? Because this has been a stock that I regularly trade for 5 years, right? So this is always on my radar, right? Once it reemerged above the 200-day, I got an alert on my app, and I was like, oh, okay. So I started watching it here, right? I missed this move. Okay? I didn't capture this move. I was looking at other stocks. I don't remember what we were trading back then. We were trading something else in this early May area that was doing well for us. So I was focused elsewhere and we were doing fine. So I wasn't like in a rush to find new stocks, but it made this move without us. So it popped above the 100-day here, resistance. And now all the moving averages were stacked, right? 200-day support down here, 50-day right on top, 100-day now broken through. And now you have 921 and price was perfectly, beautifully consolidating. You see how there's just, when you have the 9 EMA and you have price that just doesn't even want to come close to forfeiting it, that's a good sign. And this consolidation Could have been a little tighter, right? It was 101, came all the way down to 90, but I was fine with it. And once I looked at this chart here, this was the candle here we were looking at after hours. I looked at the setup and I go, this is beautiful. It's above all of the moving averages, low volume pullback. Look at the volume here. See the sell volume here? So when we came up, right? Look at this move up, this breakout through the 100-day. What is this? High volume, right? Highest in this whole stack right here. What came next? More volume, right? Look at the sell here, this first sell. Pathetic. Look at these sells. Nothing. No one's getting out. Okay? Volume profile reading is not complicated. People try to complicate it. For those that want to actually if you really do want to read something on it, read Anna Colling's book. I have no affiliation. She's great. Read her book on volume price analysis. Read that book. The stuff will be much simpler, but it's not rocket science. Okay? Like for those of you who are watching right now who don't even know how to read a chart, it should not be rocket science for what I'm pointing out here. Right? This stock consolidated, and all of these red days, there was no sellers. It was just low volume consolidation. That is bullish. After you make a move like this on high volume, a breakout like this on high volume, this low volume consolidation is bullish. So this is what made me attracted. This volume profile right here said, hey, we should buy Centrus Energy here. Okay, that was my thinking. And we knew the catalyst was big too. Okay, because when the executive order came out, right? Keep in mind, stock had moved from 70 to well, not 100 because it came back down to 90, but stock had moved from 70 to the 90s already, right? So we missed that chunk of the move. But once we looked at the executive order, it said the executive order was on a uranium independence initiative. Well, we know Centrus Energy is the only publicly traded uranium enricher in the fucking world, not in the United States, in the world. Every other uranium enrichment asset is owned by a government or is privately owned. Every other one. So a uranium independence initiative, like that benefits no one more than Centrus. At least that was my thinking. Okay. And so I slapped the shit out of it here. 7% position here. What proceeded to happen? Well, obviously we gapped up on the biggest volume in a very long time. I think that was actually the biggest volume in quite a while. Yeah, it's the biggest volume going back to Feb of that year. So big volume. And we saw this huge move. What happened on day two? A bigger move, another huge volume candle. And then look at the sells. Sell barely moved price here, even though there was a decent amount of sellers. Sell barely moved price here. This second sell, low volume again. This third, they wouldn't even let it get down to the 9. They just rallied it again without even touching the 9. Sell here. Look at the volume. So what we're going to talk about now is how did we stay in this trade? Why did I not sell one share after a parabolic move? Well, because of the price action, right? When I was telling you guys, you have to learn to differentiate a pullback from a breakdown. This is textbook. This is action that shows you that people do not want to sell the stock. This is the 9 EMA, okay? This is what I like to call the first line in the sand. Some people use the 5, doesn't matter. Some people use the 8 and 21 instead of the 9 and 21. Guys, this stuff does not matter. Use whatever you want to use, but the point is the same. Okay, this is a 9 EMA. This is what the strongest stocks in the market ride their 9 EMA. Okay. When you have a stock that is extremely thematically relevant, has a very strong catalyst, has a supportive volume profile, and price is going up session after session after session, you do not get shaken out of that stock on a red candle. You just don't. Especially if the red candle is holding the 9 EMA. And on this stock, it was actually so strong that price wouldn't even come down into the 9. It was just floating above. See these candles? They're not even touching it. Right? And so this thing just continued to make a parabolic move. What I kept telling myself is we have no reason to sell this. You know, if you search up my posts on Centrus Energy, I think I said maybe 5 times, I'm not selling one share, right? But we had members who got in with me here, who sold here, who sold here, who sold here, right? Price hit 205 on Friday, came down, but the price hit 205 on Friday. You know, people were sellers here in the 130. Leo, hold on, let me let Leo out. You have no reason to sell. Catalyst is still active. Price is holding the 9 EMA. Absolutely no reason to sell. In fact, I was hoping that this example would have some fake outs when I was going over it yesterday. I was like, oh, maybe there'll be some fake outs, right? And what I mean by fake out is this. What I mean by fake out is, and I don't know what chart off the bat that'll have it. Maybe when we look at MBIS, it'll have it. But a fake out would be something like this. Like, let's say this candle right here, right? Let's say this broke below the 9 and closed below the 9, right? That's intended to fake you out. And this happens a lot. This happens a lot with momentum names, especially. They'll peep below their 9, or even they'll peep below their 21 sometimes, right? On LEU, this thing has just been so ridiculously strong. We haven't even seen anything close to the 21. But most stocks will come down close to the 21 too and kiss it. Some might even slip below it, right? Which is why sometimes when I list stops, a lot of you guys ask me this. You go, StockDog, are your stops coded? Are your stops, do you have them set to trigger automatically? And I say no. Why not? Well, first of all, I am on my screen all day, so I can watch my stock. So I don't need to have my computer stop me out. But it's because I don't like to get faked out. And sometimes I'll say, hey, my point of maximum risk is the 21 EMA. And then I'll look at the stock, and it'll close below the 21. And I'll look at the rest of the structure and go, you know what? I don't want to sell it here. Yeah, it poked its head below the 21. And look, am I taking on additional risk by doing that? Yes. But that's me leaning on my experience. If you're a new trader, you don't have the liberty to do that. If you're a new trader, you have to follow your rules. But there are moments where you're in a really good stock, really strong name, everything fits, and it crosses your point of risk maybe by 1% or 0.5%, and you're like, should I really get shaken out of this? And then you hold your ground and you don't. And it ends up paying off. You know what is actually a good example of this? This is not relevant to the nuclear trade, but let me pull this up, is Kratos. So look at Kratos. Kratos does this. See here? This little pinch below. That's meant to shake you out. That's meant to shake out conservative traders. This. In fact, go back. Look at this action right here on Kratos. See this? Like you could have easily gotten shaken out of this. If you were using a 21 EMA as your point of risk, let's say you took the trade long somewhere around here, and you want to use this 21 EMA as your point of risk, you would have stayed in it here, right? Because price respected it. This 31 test respected it here, respected it here, respected it here. You'd have stayed in it all the way up here, right? And then you probably would have gotten shaken out right here. But what proceeded to happen, right? You could have easily got shaken out. What proceeded to happen? Price consolidated, drifted back up, recaptured the 9 and 21, and then exploded to the upside from the 30s to now 43. So this is an example of one where if you didn't have conviction, you didn't know why you owned the name, you would have easily gotten shaken out. In fact, back here, during the April and May sell-off, you would have had a tremendous amount of conviction to get shaken out here. Guess what? We did not get shaken out here. Right? We had Kratos. I got a bunch of questions about Kratos during this. People were like, oh, it's breaking down. It's breaking down. Like, are you not out? It's below the 50. It's below the 100. And I was like, guys, I just like the story. I like the story. I like the story. If you really want to be ballsy, buy it at the 200 here. Look how perfect that test was. Look at that test on the 200. This might have been one of the best opportunities of the year. I didn't even realize it came that close, honestly. Look at Danny's over here. Danny killed it at the 200. But yeah, if you bought at the 200, that what a trade, right? I mean, like if you had conviction in this name, what a trade. But anyway, I just want to bring that up as an example of price can fake you out or try to fake you out, right? These are shakeout candles. These are, get out those traders who are using the 21 AMA as a trailing stop. Shake them out here, and then we'll go higher, right? Same thing here. Like, that's what stocks like to do. They don't want to make it easy. Sometimes they do make it easy. In the case of Centrus Energy, this is easy, right? Like, once you go through a workshop like this where you understand these principles, this is not a trade you should ever be shaken out of. This gave you no reason to leave, right? Just straight up. Rides the 9, no sign of forfeit. So this has been a monster trade for us. And guess what? I'm still not selling any shares at all. You know? And maybe I'm crazy, maybe it's Maybelline, but I mean, like, I don't know. You go back and you scroll out. See? You see the rest of the lifetime of this stock? This is like a lifetime of the stock. 200 a month. If we break this, yeah, so I'm not selling any of this anytime soon. In fact, I wouldn't sell it if it came back down to 100. I would just buy more. This to me says inflection point in the whole story of the company. I mean, like, look, you can see your eyes. Can you even see the volume here? For the history of the stock, this is the last 20 years. I don't see anything, but all of a sudden, right? So, yeah, I'm not leaving on this one. And now we have a cost basis that makes this so easy to manage. Like, I don't have to think about it. With a 96 cost basis, the stock's $190. Just like whatever happens is fine with gravy with me. This thing could come all the way back down to 100. Like I said, I'd buy more. So, yeah, Centrus Energy, like, what the hell? Look at this weekly stack of volume here. Just fucking 1, 2, 3, 4. That's crazy. Crazy. But anyway, yeah, Centrus monster. And like I said, this is just something that is textbook. There's no reason to be shaken out of this at all. So let's look at the other nuclear stock that we traded on this run. Now, frankly, you have reason to be shaken out of this one as well, right? But we did not sell this one for a technical reason. Now, let's go up. Where was my initial alert here on SMR? Okay, it went out 5.9. Okay, so here's another thing to keep in mind. We got in this one before the executive order. So this position was opened prior to Centrus, right? And that's an important thing to keep in mind, right? Because this position was open May 9th. May 9th. Yeah, May 9th. It's open like right here. Okay. Why did we open this here? Well. We went over this setup exactly in the last workshop, right? Where you have this 9 to 21 pointing up, you have price sitting on top of it, and you have this 100-day overhead. It was the 200-day in the original example we used, but same principle with the 100-day. This is where we longed it because we just felt like the technical setup was good, and this thing had been a monster runner in the past. Last time we traded it, this thing moved like 60%. So we knew we had a highly volatile stock that was ready to move, and we got lucky because not only did this thing break out and give us, we were looking for this as a technical trade, right? We got in at 1720. So actually, we got in earlier here. We got in 1720, so maybe like right here. So the alert went out at 1720. So we got in with the price sitting on the 200-day with 921 curling up. Price explodes, gives us our technical move, and then over here, we get the executive order, right? It was put out as a swing trade already, right? So put out as a swing trade, breaks out here, consolidation here is beautiful. Nothing to worry about here, right? Yeah, did you poke through here, but you didn't close below it. So this is just beautiful consolidation here for us. No reason to get out of the trade. We didn't. And then you get the executive order here, sends the stock higher. Now we sold here. I sold here, right? Let's see, where was my close alert? Look it up. The exact day I closed it. The 29th. Okay. So we closed like right here, 34, 35 bucks. Okay. So that was a double for us. Why did I close it here? No technical reason, right? In fact, a lot of people stayed in this trade and it's higher, 10 bucks higher now, right? Because there was no reason to get shaken out. Price caught the 9 and rode back up, right? Why did I sell it? Well, a couple of reasons. Now, again, guys, all these tidbits I'm giving are part of portfolio management. The technical tidbits I'm giving, those are part of portfolio management. What I'm about to talk about right now is also part of portfolio management. We're not just randomly talking about stuff. I want you guys to be mindful of it, that I'm teaching you guys position and portfolio management here too. I generally use my portfolio to get basket exposure, right? So you guys look at my portfolio updates, you'll see we have like an aerospace and defense basket, for example, right? So this was part of our nuclear basket. Now, it was a technical trade when we opened it, not like Centrus, which was a catalyst and thematic trade, right? We opened Centrus because I was like, hey, uranium enrichment, uranium independence. That's why we opened it. So we opened those two positions for different reasons, right? But something else was happening here. What was happening here? Well, one of our other friends, GSRT, came on my radar, right? So I had a decision to make in terms of capital allocation, okay, opportunity cost. I knew I didn't want to sell any of my Centrus Energy because I felt like it was thematically durable. Thematically durable meaning it had an extreme amount of relevance to the current theme and catalyst in the background, right? So because of that, I didn't want to sell it. So I said, okay, I got to take some profits here, right? I mean, these stocks doubled. You can't have a basket of stocks that doubles and not take any profits. You'd be fucking crazy to do that. So I was saying, okay, I have to take profits here. And I just found out about GSRT. I assume most of you on the call know what GSRT is. I would hope by now. But if you don't, search in my journal. But GSRT was a NAV SPAC that was trading at that time at around 3 to 4% risk. Okay. The floor was sitting at 10.30, 10.20, 10.30 at that time, and the stock was sitting at like 10.50. So there was like less than 4% risk. So my thinking was, okay, I'm going to take profits on SMR after the stock has doubled. My 19 calls were up like 900%. The stock was up double. So I was like, okay, I'm going to close this position out. Maybe revisit it later, maybe not. And I'm going to take that capital and put it into GSRT. Okay. And what that does is it keeps me in the nuclear trade. I still have my high beta exposure in the basket, right, which is Centrus Energy, but it keeps me in the small modular reactor side of the trade, right? Because you have the SMRs, the OCLOs, and the NNE going parabolic. And I'm like, hey, I want to keep some small modular reactor exposure. How do I do that in a low risk way after all these stocks have doubled? Well, a SPAC is a perfect way to do that in a low risk way because I have a fixed floor, right? I have a definite floor of risk. So I took the SMR profits, put it into GSRT. What did I proceed to do in the weeks after that? Buy more and more and more and more GSRT. Last week we got a pop, finally, over 11. We'll see how it proceeds over the next few weeks and few months, but I think it'll do very well. It's trading at 1/20th the valuation of SMR. So Do I think that there's an opportunity there? Yeah, I think that there's an arbitrage opportunity there from a valuation standpoint. And if the parabolic stocks keep going parabolic, great. We have LEU for that. So this was really about basket modification and staying exposed to the theme with a lower risk exposure. That was really why I sold SMR, not because it was breaking down. Like I said, everything about this chart could have kept you in the trade. You had no reason to be shaken out of it, no reason to be scared out of it. I wasn't scared out of it. I was just rotating to a new exposure and locking profits. So that's how we've capitalized on this nuclear trade. And it's been the best trade of the year so far, not just for us, but it's been the best thematic trade of the year so far. Has been this nuclear trade. So, again, guys, the important takeaway here is watching price and letting price dictate to you when the stock is not wanting to pull back, when the stock is holding these key moving averages and continuing to ride to the upside. That's a reason to stay in the trade. And, if you had done that with any of these names, you would have been effectively, your stock would have been doubled by now. So that's really, really important, really, really important. And it's so simple. It's not a complicated thing. It's a very simple thing, but it's very, very important to be mindful of when you're swing trading anything, not just nuclear stocks. Okay, so let's look at Nebius now. Okay, so Nebius. So when did our alert go out on this? So we had 2 alerts out on the same week on this. Here. The main alert went out on ClickHouse, I believe. Yes. Main alert went out on ClickHouse. Okay, but it was also on our transcripts that week. So transcripts earlier in the week on 5/7. And then you had the ClickHouse news on 5/9. Okay. So this is around where we entered. Nebius Group. Okay. This week, right here. I mean, hell of a fucking week to enter it, right? I mean, but okay, what were we seeing? So again, I don't know how many of you have been in the server for how long. Some of you have been here for a long time, some of you have not been, but data centers was one of my main exposures headed into the year. And a lot of data center names. I had photonics names, data center exposure names. I was really bullish on data centers. But what happened? The DeepSeek moment happened, right, in February, where DeepSeek came out and everyone freaked out and they're like, do we even need GPUs anymore? And there was a whole fucking crazy panic over that. Everyone remembers, and all the data center and tech stocks sold off. So I am a maximum risk guy, right? And so I got shaken out of a lot of stocks that I owned at that time, right, in February. And so I sold them. I didn't want to sell some of them, but I sold them, right? And one stock in the data center thematic that I had wanted to own, but I didn't own, was Nebius. And Nebius, during that sell-off, fell from 50 to 18. Now, like I said, I didn't own this, but I wanted to own it. I had wanted to own it like back here when the stock was like 34, 35. I never found an entry. I was like, whatever. And then it went up in the 50s. I was like, whatever. Stock came back down here, the sell off. I started watching it again. Now, I'm not a bottom feeder. I don't catch falling knives. So there were some geniuses, I guess, that bought it here at the lows, but I don't do that. I don't buy stocks when they're below the 200, below the 9, below the 21. That's like if you're a glutton for punishment, you can buy stocks like that, but I don't buy stocks like that. So I put this on my watch list once it had fallen off a cliff, all into the third, and I was like, okay, maybe it'll start bottoming at some point. So I was like watching it week by week by week by week by week. And anyway, when this week came around, I had realized, hey, it's done some work off the lows. It had recovered. Again, I wasn't in the trade here, but it recovered from 20s to 25s. And I was like, okay, things done some work off the lows. This scared me And then after the recovery on that, I was like, okay, two magnets to the 200-day, right? You had come up here and tested it, pretty harsh rejection, and then price floated back up, right? And then you got this candle where you start poking your head above it. And I'm like, okay, this thing wants to go. 9 and 21, price was sitting above it here, you can see, and it's pushing into this 200-day. You can almost think of the way I like to think of moving averages and price and volume is I just think of it mechanically, kind of think of this as a wall. And you see the price is like budging into the wall, like it wants to go. And so here, this is when the Catalyst report came out, the analyst report came out. We opened that as a Catalyst trade. And then here is when the ClickHouse news came out. And that's when I put that note out saying, guys, ClickHouse is raising money here. I'm upping my position size on Nebius. And then what happened? Same thing that happened with our LEU trade. The Monday after, big gap up, rip through the 200-day. We're not going to time things like this perfectly every time, guys, okay? These were just two of our best calls of the year where this happened, but this is not going to happen every time where we take the stock here pushing into the 200 and you just get a monster move right away. But because it did, because we are Catalyst, or I am Catalyst focused, it's part of the reason why I'm Catalyst focused. Because when we enter a stock on the Catalyst, right, which in this case was the ClickHouse news, what it does is it gives us a head start. It gives us a cushion, right? And that cushion makes the trade easier to manage. And you've all experienced this, when you're holding a stock and you buy a stock and the first week you buy it, it goes down 5%. That's annoying, right? Is it the end of the world? No, but it's annoying because now you're like, well, I'm already red on the position. Like, what if the market turns over now? What if the stock pulls back a little more? Now I'm even more red. When do I buy the dip? When do I size in? It just opens up a world of possibilities, right? On the contrary, when you buy a stock and it gaps up right away, it's like the best feeling in the world because now you're green. If the stock does pull back, you'll probably still be a little green. You can add more, manage the position, maybe trim some options, convert some options to equity. You have so much flexibility in a much better way when you have that cushion. So once we got this cushion, we pushed up here, right? My thinking was, okay, that's a monster move on decent volume. This had been the biggest volume in a while, right? All the way through most of May. I was like, okay, decent volume. We got to push. And then more good news started coming out. We got news about their AV ride business. We got news about Jeffrey Bezos' investment here, and that pushed us through the 100-day. Once we got the Jeff Bezos Ventures investment, pushed us through the 100-day. At this point, we're at escape velocity, right? You don't sell stocks like this that it just broke the 100-day and 200-day in rapid succession on higher volume. No. And so we stayed in the trade, and guess what? It made it easy for us. Just like Centrus, made it easy for us to ride the 9. Now here is where some people got shaken out, right? But we didn't. But here's where some people got shaken out. Now, why should you not have gotten shaken out here? Well, that depends on your conviction level, okay? For me, I didn't get shaken out here because this was going to be my only data center exposure. Remember, we came into the year overweight data center, right? And I had no data center exposure after the DeepSeek sell-off. So I was like, hey, I want data center exposure back. This was going to be my horse for data center. And I'm like, am I really going to get shaken out of my horse on a pullback to the 21 EMA, a perfect pullback? No, it held it perfectly. Like, see, what a lot of noobs would think on these three red days is they would say the stock is collapsing. It's over. It fell from 41 to 30. I got to get out. I got to get out. Too much red. I got to get out. I'm selling. I'm taking my final profits. In the meanwhile, totally orderly pullback to the 21 EMA. Like pitch perfect. I think this is like to the penny. And then what happened? Boom, 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 boom. 5 green monster candles to the upside after. Right? So conviction level matters on these things too, right? But even without conviction, right? You have a buffer now. We got in at 24 here. Price went up to 40. We're up like 70% on shares. You're really going to get shaken out on a 5% low volume pullback? Look at the volume here. Yeah, you're not going to get shaken out on there. You shouldn't. right? And what does that allow you to do? It allows you to ride for what ends up being a double off the lows. 55 we hit. And look at this. So now this, right? Okay, well, now we're up here, right? So now what happened here? I bet you people got shaken out here. But look how perfect this is. Just sitting on the 9. Like, and some people look at this action and they go, this is ugly action. This is relative weakness. The stock's losing momentum. Really? I don't see that. It's just flagging. And it's not only flagging, it's flagging perfectly. You're just holding this line perfectly. Look at these wicks below. And the closes are just holding the 90 MA perfectly. So let the structure tell you when there's a reason to panic. Not your brain. Don't let your brain psychologically go, stock's red 2 days in a row. No, it's all over. I'm going to lose all my profits. Like, that is silly behavior. Let the chart tell you when there's a reason to panic. There was no reason to. This, we got in here. Boom. Boom. There's literally not a single sign of panic until this area. And this is where the whole lesson of these types of workshops come in is don't let yourself be the sucker on this kind of action. You know, these are the like low volume sellers that just got cooked. Boom. Like, look at this volume on this move. So don't let yourself get shaken out of low volume selling into structured areas. I'll repeat that. Do not let yourself be shaken out on low volume selling into structured areas of support. If you do that, you are doing it wrong. Period. You're just doing it wrong. Like, if you get shaken out on that, you're doing it wrong. If you get shaken out here, you're doing it wrong. You know, if you get shaken out here, let's go back. Let's go back. This is where you should have gotten shaken out. Okay. If you're in this trade here, price below 9 and 21, this is where you start getting concerned. Does it hold to 50? No. Breaks down. This is bad action. See this action? This is the opposite of what we're talking about. Price cannot find its way above the 21. See how price here tries? Rejected, right? This is the opposite of this. See how this price is riding? Here, price is rejecting. All the way down. Since the forfeit, as soon as this thing gave it up, actually, see how it gave up the 21 EMA up here at 39, right? Since then, look, it was unable to reclaim the 21. You had an opportunity to reshort it here. 109, 21 EMA retest. And I didn't short it on the way down. I'm not saying like, ooh, back here, I shorted it. I didn't short it here, but I'm saying this is bad structure. This is the opposite of strength of what we're looking at here. So Nebius is actually giving you back-to-back great examples of what a relatively weak stock looks like and what a stock you should avoid looks like versus what a stock you should be giga long looks like on this half of the chart. So tale of two cities here, right? Just the year-to-date chart gives you a tale of two cities on this. Like, just this chart alone can teach you so many lessons. Just looking at these 6 months. In fact, some of you should look at this chart this weekend. Or it's already almost the end of the weekend, but look at it tonight. Spend some time here and study what price did and how it acted, right? On what was a very strong stock here, what happened? What started happening here? Well, we came down to the 21, tried to hold support here, right? Came back up, then forfeited hard, then forfeited again. Now came back up and retested. Nope. Not even an attempt. Dropped price, dropped price, dropped price. Came back again here. Drop price, drop price. Like, look at these brutal rejections. And the price is telling you before it happens. Right? You're going to be a wizard to see this. Like, look at this rejection. Look at this rejection. Look at this rejection. Right? You don't need to be a genius to see this. So don't think of this as complicated. It's not complicated. I'm speaking to it simply because it is simple. Okay? But some people look at it and just still can't recognize that reality. They think it's some kind of game of astrology or something. And it's impossible to tell. It's not impossible to tell. You just follow the price and the volume and the structured moving averages and the levels of support, and you'll be able to read price. You'll be like, oh my God, that's really all there is to it. Yeah. Now, are there more complicated forms of technical analysis? Yes. And like I said, props to the people that do that. I'm not knocking them at all. But for me, I've never needed anything more than looking at price like this. I've never needed to be any more detailed. Just moving averages, volume, and the price, and just watching how it reacts to those spots. Like if one of you had back here asked me, hey, Stock Talk, Nebius is selling off. I'm thinking of buying the dip. Should I? Back here, I would have told you no. I would have said it's breaking down. You should stay away. If you tell me here, hey, this thing got above the 100 and 200 day in the last 2 weeks, a good long, I would have been like, yeah, we actually entered it back here, but yeah, it still is a good long here. And look what happened. 30s to 50. So, just know what you're looking at. Let the price tell you if you should be worried or not. Don't let your psychology tell you if you should be worried or not. That is the single greatest mistake. Don't let what you think scare you out of a trade. Let what price is telling you scare you out of a trade. And sometimes you should be scared out. These guys should have gotten scared out of it here. This was severe breakdown. Losing the 9, 21, and 50 in rapid succession like that is a severe breakdown of technical structure. And you can see what the consequences of that were. So Nebius, we entered here on a very similar setup, like I said, to LEU. 921 pointing up, 200 overhead. It gave us the breakout. It gave us an additional catalyst here. So now we had two catalysts. We had high volume buying. We had all the recipes to stay in the trade. And on top of it, because it was our only data center exposure, we don't have a basket of these, like the nuclear trade we just talked about, right? We don't have a basket of these. So because of that, I wasn't going to let this low volume selling into the 21 scare me out. And, so we still have full size and shares on this, and it's been an absolute beauty. So yeah, the Nebius and Centrus Energy recaps there for you guys. Like I said, I was going to do several more stocks: Bloom Energy, Genius, HII, Coors, GSRT, CRISPR, Warby. I was going to go over all these. We'll go over them tomorrow because we don't know where the price is going to look like. But just flipping through some of them quickly. Let's look at CRISPR here. Just gorgeous structure, right? Like coming above the 200. What did we just talk about? Like on both of these charts, NBIS. Look at what happened when we were doing this on NBIS, and look where it is now. Centrus Energy. Look at what happened when we were doing this on Centrus Energy, and look where it is now. We're doing it on CRSP. Who knows? 20% short interest. Maybe, maybe not. Bloom Energy. Beautiful structure. It needs volume though, right? That's what's missing. We need bigger bidders here, but 20% short interest. This close was gorgeous on Friday. Might not look like that tomorrow though. So, I can go over these guys, but they're all going to look different tomorrow, Genius. Daily's kind of sloppy, but monthly is gorgeous. This is really where my focus is on the monthly chart. Just beautiful monthly structure. Everybody head into that gap. What else did I go over? HII. This thing had gorgeous consolidation last week. Just so pretty. Look at this. Look at that. Every single moving average stacked like a belt here. This is going to be a brick of support for this stock. Now price coming into the highs. Very tight close here. Beautiful. Just curling up on the daily. This thing is just gorgeous. I wish it was a bigger mover. For you degens out there, don't buy HII. You're going to be sad because it's going to move slowly. Coors, also just beautiful. Would like more volume. Warby, gorgeous. Keep wanting to buy more of this stock too. Deserves to be re-rated. But yeah, these are just like all great setups. They may not be great tomorrow though. You have to be mindful of that. These are daily setups that I just flipped through. So, um, we'll do another workshop tomorrow. We'll do another part tomorrow. You guys have questions right now over anything I went over? We can do some questions. Anything I went over or anything I didn't go over. That works too. If you have your hands up in the thingy, don't do that. Just ask me in the Discord chat. Don't ask me in the Zoom. Just go to the community chat on the Discord if you want to ask questions. Talk about market conditions tomorrow. What do you want me to say? I don't know, show what you mean by market conditions for tomorrow. You be more specific with that question? How much calls versus stocks? I generally do 85 to 90% equity and then 10 to 15% options. It just depends on a variety of factors, the closeness of the catalyst, the liquidity of the options chain. I've mentioned this before. I'm generally going 90 days out, less than 10% out of the money. That's my sweet spot. I like there to be liquidity though, but that's a very broad question. It just depends. But like I said, it varies in that range, 80, 85 to 90% equity on each position and then 10 to 15% option. I use options as a tool for leverage. That's it. Um, can you talk about, is there any opportunity to buy in now? I don't know what you're talking about. Buy in what? Buy in what stock? MBIS still a good entry if it holds a 921. I mean, I'm not buying more up here. It's double from where we bought it a month ago. So I don't know. When you ask me, is it a good entry? The way I interpret that question is, am I going to buy it here? And the answer to that is no. If you want to buy it up here, yeah, but be mindful. Like, look, when you look at a stock like MBIS, like, is this nice consolidation? Yeah. Is this all things being equal, probably going higher? Yeah. But on market weakness, could it come back down to 44? Yes, very easily. Okay. On further market weakness, could it come back down to the 50-day in a really bad scenario? Yeah. Could it come back down to this $40 mid of the range here? Come back down here and test it? Yeah. So market conditions do matter. You're saying, is it a good entry up here? I mean, no, this was a better entry where we got it. If you didn't buy it back here when we alerted it and you want to buy it now, yeah, but understand that you have a lot of gravity. If the market goes up, is this going to go higher? Yeah, my bet would be yes, because it's flagging up here on literally major, major buy volume. So yeah, it looks great, but understand, it's flying high. Kratos is a beast. Yeah, it is a beast. GSRT or LEU? Oh, that's what your question was about. If it's too late to buy in now. I hate those kind of questions. I hate when you guys ask me that because like I tell you when I'm buying it. I mean, if you don't want to buy it when I'm buying it, then you want to buy it 3 weeks later, that you have to make that decision. If you don't buy it when my first alert goes out for whatever reason, you're either not interested at the time or your buying power is taken up. If you choose to buy something I bought 4 weeks ago at a higher price, that's your prerogative. If I still own it, I still think it's going higher. That's the simplest way I can put that. But do I think it's the best entry at all times? No. So GSRT, can you buy it in the 11s? Yes, but your risk is going to be higher than my risk was when I alerted it in the 1050s and 1060s. That's the simple answer to your question. Yes, you can buy it, but your risk is higher. On LEU, same thing. I mean, we bought it at half the price it is today 1 month ago. If you want to buy it at double the price, sure, but your risk is much, much higher. What do I use for analyst research and news? I have about 25 different subscriptions. I pay about $3,000 a month for news. So you'd have to ask me what kind of news you want and what you're looking for specifically, and I can maybe give you some better guidance on that. But quality news is expensive. Um, how do you know when a theme has come to an end? When the market leading stock in the theme is breaking down significantly. below the 50, below the 100, below the 200. That's what you look for. Technical breakdown, loss of strength, loss of momentum, loss of volume on your market leading stocks. That's how you know when a theme is over. If NBIS loses the 21 day, will you sell? No, it is a core position for me. It is an investment for me. I will buy the dip if it breaks down, not sell. Do you use 9 and 21 EMAs? Are all the rest MAs? Yes, I use 9, 21 EMAs, then I use 20, 50, 100, and 200 SMAs. So those are the simple moving averages. But 9 and 21 are the only EMAs I use. Can we quickly go through the moving averages you use and what you typically look at in terms of their relationship? You have to be more specific what you mean by relationship. But I just told you which ones I use. 9 and 21 EMA, 20, 50, 100, and 200 day SMA. That's what I use. I don't know what you mean by relationship, though. Unless you're talking about things like a golden cross. Golden cross is when the 50 crosses the 200 on any time frame. LEU put up an inverter and hammer. This is signal exhaustion. It can, but I don't pay attention to individual candle structure like a lot of technical traders do. I think it's silly. But yes, it did put up an inverted hammer, and yes, maybe that signals some exhaustion, but I don't care because it's a core position. I'm not selling it. My trading positions are managed very differently from my core positions, guys. The reason I list my portfolio the way I do is so you know which stocks I'm not selling. I'm not selling Tesla. I'm not selling Robinhood. I'm not selling Amazon. I'm not selling Centrus Energy. I'm not selling Nebius Corp. I'm not selling, for now, not selling Genius unless it breaks up 200, but I don't think it'll do that. So core positions I'm not selling. Period. Trading positions are subject to removal if they break down. Should be pretty straightforward. Do you mind walking through your process when deciding whether or not to exercise your call options? I very, very, very rarely exercise call options. The only 2 call options I have exercised in the past 2 years has been the Robinhood $20 calls in December, I believe it was. I don't remember, something like that, whenever I alerted it. December and November, I exercised 15 and 20 calls on Robinhood. And then I exercised ASTS 25 calls last Friday. Those are the only 2 contracts I've exercised in the last 2 years. I rarely exercise contracts, and it's usually a bad idea unless you really want the shares, which in the case of ASTS, I really wanted the shares at 25 because the stock was 44. So I wanted the shares at half the price. Sometimes it makes sense to do. But keep in mind, when you're exercising, you are giving up your premium. The premium you paid for the stock, for the contracts, you have to give that money up. So always be mindful of that if you want to exercise. What's my opinion on how Iran will affect the oil markets? I don't know. I don't trade oil, and I don't really care about how it'll affect the oil markets. What I will say, though, is that if it does create a massive run in oil, which leads to higher CPI inflation, which ties the Fed's hands, that will annoy the markets, and that probably will lead to the market selling a little bit. I don't know if that's going to happen, though. Geopolitics changes very quickly. I'm going to keep an open mind. I don't try to predict geopolitical things or factor them into my analysis because it's a fool's errand. When do you know when the time has come to an end? Below a 50-day? There's no hard and fast rule. There's no like when a stock loses the 50-day, it's over. It just depends on the overall structure. It depends on how much the stock has run recently. Depends on what the narrative is. It depends on your conviction level in the stock. Like, like I brought Kratos earlier. Like, I didn't cut Kratos when it lost the 50-day because I was convicted in the name, right? Like over here, it broke down. I could have cut it here, but I didn't. People asked me about it back then. They were like, "Oh, it's breaking out. What are you going to do?" I was like, "I'm not selling it." And it recovered. It's not always going to happen. Sometimes I'll be wrong. Sometimes I'll choose not to cut something in and it'll break. Like Kratos could have broken the 200 day here. Then I would have cut it. Now, would that have been great? No, because I would have lost a lot of money, but it didn't. So, I have wider risk on my higher conviction positions. So if a high conviction stock breaks below the 21 EMA, I'm not going to cut it just because of that. Like I'm not going to be like, oh, I've really loved this stock and I got a great entry and it lost to 21 EMA, so fuck it, I'm out now. Like, no, the conviction level matters a lot in the position management. You can't treat every position equally. And this is where I diverge from your typical technical trader. I don't have hard and fast lightning rules where it's like, if it loses the 21 EMA, I have to cut it, no questions asked. No, it depends on the context of the position, the reason why I own the position, what my intention is with the position. If I intend to hold a stock for years, I'm not selling below the 21 EMA or the 50 day. My intention is to hold it for 5 years. Like, why would I sell on that kind of thing? So the intention of the position matters. How do you size your initial position? My standard sizing is 3.5% of the port. Higher conviction positions are 7+%. Could you analyze OSS chart? Okay. I'm not looking at the lower time frames, but I'll look at it. Yeah, it looks great. Looks fantastic. Looks great. Usually, in my opinion, if you guys ask me to look at a chart, it's going to be it looks good or doesn't look good. I mean, I don't talked about this before, but I don't like go through and draw lines and wedges and shit. Like you see all these people on Twitter doing. I don't do that nonsense. I just like look at the chart and I'm like, hey, it's accommodative. Like this is an accommodative chart. High volume buyers here, pulled back, holding the 9 EMA, above all moving averages. Structure looks good. Came out of a base. Like you should be able to have these instinctual takeaways. You'd be able to look at a chart, good, not good. Right? When I was talking about at the start of the workshop, I look for technically accommodative charts. I'm not looking for something specific, right? I'm saying, hey, is the volume profile good? Is price holding up well? Is it a relative strength candidate? Is it above all the moving averages? Cool. Double thumbs up. Let's go. Yeah. I always like to say, keep it simple, stupid. Not calling you stupid, but it's just like a figure of speech. Thanks for stream. May have been a minute. Just curious on what you use for screening stocks. I don't really use screeners. I do enough reading and research every morning to have a basket of stocks that I'm looking at already. I narrow down what I'm looking at every week based on what I see in the mornings, the news, the analyst reports, thematic things that may be happening. I also have a very, very detailed watch list that has like 1,000+ stocks on it that are separated by categories. So whenever something's happening in a sector, just flip to one of those watch lists. I have 10 names waiting for me that I can trade. So I don't really use screeners like everyone else does. I find that you comment on your stocks when they're green, but much less on their red days. This gives me FOMO and panic. That's your problem. I don't know what you want me to tell you. Weird comment. I provide updates when stuff is working, but if you need my reassurance when something is red, I don't know what to tell you. There's a pretty simple way you can keep track, which is my journal, which if I'm selling something, I will tell you in my journal. You don't need to ask me if I'm in a stock, if it's red. Like, I'll be clear with something. If you can't sit through a stock being red for 5 or 6 days, you shouldn't swing trade at all. Period. That's like a pretty simple way to put it. You have to sit through red periods to swing trade effectively. Period. Period. Like if you can't handle red, it's just like don't even start it. Just be a day trader or be an investor because like it's not going to work for you. If you get scared like when you're down 5%, like it's a non-starter. You won't even be able to swing trade at all. Is BRBK good swing? No, I don't trade Berkshire. You can buy and invest in it if you want, but I don't think it's a good trader. Then the nuclear theme, did you look at NNE? Yeah, don't have much interest in it, but the chart looks good. All the nuclear charts look good. You're not going to find a nuclear chart that doesn't look good. Yeah, this looks great. Like nuclear is like the hottest theme in the market, so they're all going to look good. But yeah, I'm not a big fan of NNE. I heard they have some kind of like oil and gas exposure or something, and so now they're running with oil and gas stocks. I don't know. I did hear something like that though. Cool. Can you talk about when you have a give? Can you talk about when you have given up or sold any of your investments? I sold all my Google shares. Was it last year or the year before? That's the last investment I exited was Google, which I owned for many years. Why did I exit it? Uh, I'll keep it simple. I just think their search business is in jeopardy. And that's their biggest business, and they have 90% market share in it. And I just think that their market share is going to go down. That's why I sold it. After the ChatGPT moment, I just gave it some thought, and I was just like, yeah, like I think Google's going to be competitive in AI, but I don't think they're going to be 90% market share competitive, which is what it would require to be a one-to-one replacement to their search business. So yeah, I just sold it. Sometimes I just think about things and I just make a decision. And so yeah, I did very well on Google, but I just didn't feel the need to have my capital tied up in it anymore. So I sold it and I just switched it to Amazon. More Amazon. I already had Amazon, but I just added more Amazon instead. Um, but that's the last time I gave up on an investment. Before that, I mean, the first stock I ever invested in back in 2015, 2016 was Adobe. I sold that. I don't remember why I sold it. I think I sold it like 2017, 2018. I don't remember why I sold it. I don't really sell investments because you know what the thing is, I don't really make too many investments. Outside of Amazon, Tesla, Centrus Energy now this year, I should have honestly invested in that years ago. When I first bought Centrus Energy, it was $40. I traded it and sold it for 80 like a dumbass. So now that I got back in, I'm never selling that again. But yeah, that's a name I should have been invested in. It's been my favorite nuclear name for like 8, 9 years, and I just never held on to it. So that's a mistake too, I guess you could say. I make tons of mistakes. Like I know I talk in a knowledgeable way. That's because I do have a lot of experience trading and investing, but I make a ton of mistakes, guys. I make mistakes actively managing still all the time. I'll like sell a contract sometimes and be like, why the fuck did I sell that? Like 5 minutes later, I'll be like, wait a second, like that stock still looks great, or like a lot of the lessons I told you guys today about getting shaken out. You think I'm implying that I never get shaken out? Guys, I get shaken out all the time. Okay. It's going to happen to you, but it's just about doing the work to do your best to not let it happen on your high conviction ideas, right? That's why I spent today recapping two really high conviction trades to show you, hey, that's why I managed those differently than some of the other stocks where I did get shaken at. You know, that did end up going much, much higher without me. And there's a lot of names like that. A lot of names like that. And there's some names where it's not about getting shaken out, but there's some names where I sold them just because I had to generate buying power. BWXT is a great example of this. Okay. BWXT, I sold it over here on this first gap up right here. Like I could have sold it for fucking 30% higher if I waited a couple weeks, but I just needed buying power. Right. I was maxed out on positions and I was like, I have too much nuclear stocks. Like I got to sell something. And so I just like kind of sort of panic sold it. That's a mistake. I probably could have sold something else, something shittier that wouldn't have just kept going up. So, because this is a stock I really love, and I didn't really want to sell it, but I just like, I don't know, spontaneously sold it. So I make mistakes too, all the time. Um, Not a question, but would love to hear your opinion on GLDD, which is a dredging company here in the US. I don't know anything about it, so I won't be able to give you an opinion on the company, but I can look at the chart. Looks fantastic. What is this? What happened on Friday? Maddie, are you in the call? Okay, well, I guess Maddie's not on the call, but I was trying to answer your question. On, no, not Mads, Maddie boy, who asked the question about GLDD. I'm just asking what happened on Friday, why the volume was so high on the sell. Unless it was just a product of quad witching. I don't know. But yeah, Char looks great outside of that concerning extremely high volume sell. This thing has had some weird ass sell candles. I don't know anything about this company, so I can't give you context around what happened here. Yeah, I don't know. These are concerning though, but the structure looks great. The structure looks fantastic. I just don't know what the hell is going on with these big volume cells. Um, okay. Let's see. How do you choose strike price and expiry for options? Two scenarios. You're expecting a short-term move, long-term move. Okay, if I'm expecting a short-term move, depends on how short-term. If I'm expecting a very short-term move, I go 1 week out. If I'm expecting something within the next month, I go 1 month out. But I mean, that's really dependent on the catalyst. I mean, it's a very specific question. It just depends. Um, but that's rare. Most of my options purchases are 90 days out, less than 10% out of the money. I think I was um, talking to one of you in the chat. I don't know if you're on the call, whoever it was, but like last week, and he was like sharing with me a bunch of options that he owns that are like down 80, 90%, and they're all just like super far out of the money calls. Like, I don't know if you guys have trees in your backyard that grow dollar bills, but I don't. And I don't like just burning money on 60% out of the money options, and you shouldn't either. So, um, don't do that. I don't know, like what you're thinking you're going to get out of it. Keep in mind your break even is relative to the contract strike. So on a $30 cost, stock, you're buying $60 calls. That stock has to go 60 plus for you to make money. Like, it's just stupid. Buy close to the money. You can get these crazy gainers that you see, 800, 900% that you see people posting, that I post sometimes. Those are all close to the money contracts. The 900% gainer I posted on SMR, that was $1 out of the money. It was a $17 stock when we bought it. I bought the $18 calls. Those ran 900%. You don't need to, if you want to make big gains, you don't need to buy stupid contracts to make big gains. Okay. This is a myth out there that you have to buy cheap, shitty, far to the money contracts to make money, to hit a lotto. No, buy close to the money contracts with time, and you will make really good money on that. Okay, if you buy them on the right stocks, you don't need to do these crazy gambling approaches that people do. It's stupid. There's going to be certain scenarios where it makes sense, but they're very specific and very few and far between. And you should be very experienced trader before you try doing that. Yeah, Henry, there's not going to be another sale. Prices are going up next quarter because people are not canceling and a lot of people are joining and servers getting too big. So prices are going to be going up. But none of you will have your prices raised. You all keep your prices. But I mean, for new people, prices will be going up. So yeah, there's not going to be a sale. Would what be a delta of 70 or 80%? I mean, I don't know. It just depends on the contract. I think you're referring to the out of the money contracts, but yeah, it just depends on the contract. You don't really need to look. This is another myth. I love doing on these workshops is just countering myths that you guys hear on Twitter, like everything is in the chart, like all these stupid phrases you hear from people that are not true. That's part of my goal with these workshops. But you don't need to worry about the Greeks that much. This idea of like study the Greeks and you'll become a wizard at options trading. No. Look at the IV, look at the break even price, look at the liquidity. That's it. And you pretty much all you need to know. You don't need to like become some sort of expert in options Greeks to pick good contracts. It's not true. Um, I'm not going to tell you my portfolio value, but it is a large portfolio. It's the majority of my net worth. You use your imagination. An options workshop, I mean, on what topic? It's that's too broad. I can teach you guys anything. Just ask me exactly what you want to know, and I can teach you. But you gotta have to be more specific with the questions. Options is a very broad thing. Yeah, I mean, that's not really workshop material. Like I said, if you want to pick up one thing about how I trade options, 90 days out, less than 10% out of the money. That's it. That's the magic sauce. Like if I did an hour workshop on options contract selection, you guys would get bored. There's nothing really to discuss. If you want to give me very specific questions, like, hey, this is the stock I'm looking at, and I'm looking at these options, which do you think would be best? I can help you with that. Or if you're looking at a stock and you're saying, hey, how far out of the money is too far out of the money? I can help you with that. Those are specific questions. When you guys tell me like, can you talk about options? Like that's, it's too broad. What is the break-even value of an option? It is the premium plus the strike. So let's say a stock is 50 bucks and the $60 calls are $3. Your break-even is $63 because you paid $3, right? The money you paid is $3, and the stock has to go to 63 for those to be profitable. Now, you could sell the contract at a profit before expiry, of course, in which case the stock does not need to go to 60. But you shouldn't take that mentality on if you're a new trader, because then you're just going to be gambling with far out of the money shit, waiting for it to move 5% and then selling it. Like you're going to end up doing that if you think of that as a new trader. Experienced traders, yeah, experienced traders can trade far out of the money contracts, but you really have to know what you're doing. When I say an option is mispriced, how do you determine it? When did I say that? I don't know what you're referring to, Ali. Did I say that just now? I don't think I said it was mispriced. I think I've said stocks are mispriced. If I did say an option was mispriced, what I probably meant was that it's the IV is too low for the catalyst. So if a stock has a catalyst and it's in a hot theme, and the IV is like sub 50, even sub 60%, I would consider that mispriced. But I don't know if I generally use that terminology with options. I more so use it with stocks when I think a stock is mispriced. Yeah. You want to look for as low IV as possible. The more IV you have, it's just, yeah, if you're buying stuff 90, 100, 110% IV, you're going to get buried more often than not. It'll tell you on your brokerage. Robinhood should tell you, Webull should tell you, Interactive Brokers should tell you. Everybody, you click on an option, it'll show you implied volatility. That's what the IV stands for. You talk about where to stop loss, structural breakdown, technical breakdown. It just depends. There's no hard line in the sand. I know a lot of you, this is another problem with new traders, and I'm not knocking any of you. I'm just trying to teach you this mentality of like, you guys want it to be simple. Like you want there to be a line. You want it to be like, hey, 21 EMA, I'm going to use that for every stock. Every stock I enter, if it goes below the 21 EMA, I'm out. No, no, that's not how it works. You have to look at the stock and ask yourself, like, okay, let's look at this. I don't even know what the stock this is. This guy asked me about, but this is just on my screen right now. So let's look at this, okay? If you looked at this stock, would you use the 9 EMA as a stop? Now look at this carefully. Based on the price action that you have seen, is the 9 EMA an appropriate stop? No, right? Why? Well, here's a 9 EMA forfeit, price proceeded higher. Here's a 9 EMA forfeit, price proceeded higher. Okay. And I'm sure if you zoom out that this stock has done that before. Yes. Okay. Here, look, price was climbing here. 9 EMA here, right? So let's go back even further. I don't even know what this name is, but let's go back to NBIS. Use a better example because I don't even know what the stock is we're looking at. Okay, NBIS. Is 9 EMA appropriate stop? No. 9 EMA violation, stock proceeded way higher, right? So you have to like look over here. The action over here. Was 9 EMA an appropriate stop up here? No. No, it was not. Right? 21 was much more appropriate here. So you go look at the behavior of the stock, look at the price. Right? Don't let me tell you what to use as stop loss. Let the price tell you. Go back and say, hey, where did it, when this stock was climbing in the past, where did it respect? Right? Where was a good point of risk to have? Because if you just pick something arbitrary and say, I'm going to use the 9 EMA, well, you would have never been able to trade this name. Right? You would have never been able to stay in that stock if you used the 9 EMA. It would have just shaken you out over and over again. Right? So there's no like one magical level. Learn how to read price. Broadly speaking, learn how to read price. It's not complicated. I really promise you, it is not complicated. How do you play Tesla Robotaxi release in Austin? Calls or puts? I wouldn't play the Tesla Robotaxi release in Austin. It's a known quantity. I don't see a trade to be made off of that. Any unusual options flows? Considering, yeah, I do consider unusual options flow. If you listen to the recording of the workshop, I went over some of my general principles at the beginning, and I went over accelerants as one of the things that I look at. It's the third thing I look at. So first I look at the chart or theme, then I look at the chart. Sorry, first I look at the catalyst or theme, then I look at the chart, then I look at the accelerants. And uh, dark pools or unusual options flow or short interest, those are all considered accelerants to a trade for me, which means that it can make the trade move faster, which is what I like. You discussed IV a bit. How does it affect the price of the option? Look up implied volatility and watch a YouTube video on it. That's not a question that needs to be answered here. Isn't it a hard line in the sand? Remember, guys, stuff that you can Google or put on ChatGPT, do that. You don't need to ask me to explain those things. Stuff about my strategy and things like that, yeah, those are the questions you should ask me because I can answer those very specifically. But stuff that you can be Googled should not be asked. If you don't know what a term is that I'm saying, implied volatility, look it up. If you don't know what options premium means, look it up. You don't know what the 21 EMA is, look it up. Take some initiative. You don't need me to spoon feed you guys every single definition of every word, right? That's not the purpose of these workshops. Acceleration, what do you mean? Like acceleration is something that can accelerate the trade. Unusual options flow, short interest, dark pools, those types of things. Okay, any other specific questions before we wrap this up? I'm gonna go watch the NBA game. We will do part two of this tomorrow night where I'll go over some daily setups that I think are setting up for more upside. I don't know what time. I'm pretty busy, guys, so I try to just do these whenever I can. So I don't know what time, but it'll be tomorrow at some time. Probably after I get back from the gym. How to use dark pool. Get a provider, unusual whales, uh, black box, get one of the flow providers. They'll show you how to track dark pools. Is there more stuff going on with India and Pakistan or what? Are you guys trolling me? Yeah, you guys are trolling me. All right. Hey, on the weekends, bro, I'm unplugged. All my weekend news is late. Not during the week though. During the week, I'm pretty on point. Okay, guys, thanks for tuning in. Well, like I said, we'll do part two tomorrow. I'll go over some setups that are setting up. Have a good one. I will post the recording. Take it easy, ladies and gentlemen. Love you guys. See you tomorrow morning. I'll be on live streams in the morning.